Good evening, everyone. My name is Steve Park-Smith, and I'm from American Mortgages, and welcome you to our event for today. And American Mortgages is one of the largest companies providing mortgages for foreign nationals and US expats to help them buy their property in the US. We regularly hold webinars where we believe which adds value to our clients, providing information on opportunities in the real estate market. Today's event will be talking about buy to rent properties, and otherwise called as turnkey properties. And we've got two people tonight. So we've got Jared Garfield from Next Level Investing LLC, and we also have Nick Worthing, Vice President US Loans at American Mortgages. So first of all, we'll have some presentations by Nick and by Jared, and then we'll have a Q&A session. After the Q&A session, we'll then be sending out the webinar to those who registered for tonight, and that will have their details so you can contact them directly. And in addition, the video of tonight's webinar will later be on our YouTube channel, and that will also be a link in the email that we sent out. Now, with the Q&A session, you can answer questions through the Q&A buttons at the bottom of the screen on the Zoom area, and you can also email them in as well. Now, without further ado, I will now introduce Jared. So Jared Garfield is the CEO of Next Level Investing. He's one of the top real estate investment acquisition and investment property trainers in the US, former host of Fox Radio real estate investment show, the Rich Life Real Estate Show, and a frequent speaker at conferences. He's analyzed, closed, renovated, placed tenants, and managed over 3,000 properties in 6 states. And he's owned apartment complexes, multiple vacation rentals, and developed subdivisions. He's also a licensed broker in Alabama and Georgia, Utah. Well, without further ado, please go ahead, Jared.
Stephen, thank you so much. It's really nice to be with you guys this afternoon, and it's really exciting. It's kind of fun with these time differences. It's 6 a.m. for me, where I'm at, an afternoon for you. So this is a lot of fun. I get to feel like a global traveler, even though I'm not leaving my kitchen this morning. Okay, so Stephen, if you want to advance the next slide. One of the advantages of being able to work with us is we are in multiple different markets, and Stephen will click through and let you see some of these different markets. But investing with us gives you the ability to be able to work with one company and be able to have access to all of the top cash flow markets in the United States. Right now, we have a strong footprint in the Southeast, in Montgomery, Alabama. We've done lots of properties in Atlanta, Georgia, Huntsville, Alabama, Montgomery. Currently, though, our markets are Montgomery, Alabama, Indianapolis, Indiana, and South Bend, St. Louis, Missouri, Kansas City, the Quad Cities, which is in Iowa and Illinois and straddles the Mississippi River, as well as Cleveland, Ohio, and Pittsburgh, Pennsylvania. One of the things you'll see as you go through these properties, we talk about turnkey or rent-ready properties. Turnkey or rent-ready properties doesn't mean that the property has absolutely no risk and that everything's 100% perfect. But what it does mean is you can see the before and after pictures here where we go in and we buy a property that's distressed, and you can see the darker color photos. That is what the property looked like. And then the property just to the picture just to the right of each picture is the renovation that we did post. And so what happens is you get a very high level of renovation where all of the work has been done for you. You don't really have to do anything. You can step in, have a property that already has a tenant in place, is already cash flowing from the time that you purchased the property, and ready to get a very high return. And as you're going to see as we go through this presentation, and also from the pictures here, because we've been able to buy these properties distressed with a lot of equity, we're able to do a major amount of renovation and give you a hassle-free property that's already renovated to the highest standards and should not have any problems with appraisals. It should be very easy to maintain the highest quality tenants who have high demand to want to live in these properties. One of the things that I think you'll like as you go through this process with us, Steve has arranged for you to be able to get access to a deal marketplace. You're going to have access to a software that's going to have dozens and dozens of new deals monthly that you hit that are mostly off-market properties that you can't find anywhere else. And these properties have lots of pictures you can scroll through. Right at the very beginning on the main page, it tells you the internal rate of return, the cap rate, the cash on cash return, whether there's equity in the property, which sometimes there can be. It tells you the bedrooms, the baths, the square footage, gives you financial analysis and tells you whether it might work as a vacation rental, as a buy and hold, or perhaps even the BRRRR method. So there's a lot of different things that it gives you. It gives you the expense assumptions and shows you the property management fees, breaks down any CapEx expenses, and gives you a complete financial analysis, including the cash on cash return, the cash flow, and the equity, so that you can see whether or not the property meets your objectives. So you get to see not only pro formas, but you get to actually analyze the properties yourself and see how they perform if you were to purchase a property like that. And this next slide just kind of shows some of the things that you get access to potentially, that you can subscribe to for a small monthly fee. You can analyze properties and be able to get, how would this property perform with a loan? What does this property look like as far as the monthly expenses? What are my cash flow? What's my income? And you can see what happens if you were going to hold it based on appreciation rates, what it might be worth if you were to sell it in 3, 5, or 10 years. It even tells you if you applied the cash flow of this property. It says that you can have this property paid off in 6.2 years. If you took all of the cash flow and applied it towards the mortgage, you could actually pay it off in 6.2 years. And at that point, you own it free and clear. And so it gives you some really good things like that. You get your debt service coverage ratios, which your lender likes to be able to see how viable the property might be. So just some really exciting things. It gives you an amortization schedule and everything like that. It tells you your out-of-pocket expenses and shows your financing terms. So our first market that we want to talk about is Montgomery, Alabama. Montgomery is about 90 miles south of Birmingham, the capital of Alabama, in the southeast. It's a stable, strong economy with a major U.S. Air Force base. The Army War College is where all of our officers get trained. It has a major Hyundai manufacturing plant, big Amazon facility. Rheem Air Conditioning has a large plant there, as well as, and it's the headquarters for Alpha Insurance, which is a big property and casualty company for insurance. It's the home to several different universities. And so there's a lot of diversity in the job market as well in this market. One of the things I like about Montgomery, we've been in this market for about 7 years now. We've renovated over 750 properties in this market. It's a very affordable market with a great inventory of homes. Right now, I've got one property that we're not going to show today, but if you'll get with us, we have a 5-unit property. It's a duplex and a triplex on the same tax parcel ID. And there's just some really tremendous properties here. There's areas of great cash flow. You're about 2 hours and 46 minutes to the Gulf of Mexico, to beautiful white sandy beaches. So if you wanted to come check on your properties in this market, it's very easy to go spend some time at the beach and enjoy that. There are some areas of Montgomery that have expansive soils, so you have to make sure to avoid those areas because that can lead to foundation problems. So we know what areas to avoid, and we try to avoid any areas where you have expansive soils. And you see that a lot in Texas and some other places in the United States. But that's one concern that I like to alert people to, that you have to watch for during the home inspection process. This property here is one that we have available right now. This is a wholesale property that we really like. Part of the reason this is a great deal for you is our property manager, who's a licensed broker in that area, believes this property could sell for $140,000 to $150,000, and we're offering it right now at $120,000, which means that you get the opportunity to have potentially as much as $20,000 to $30,000 equity. When the current owner-occupant moves out of it, it probably will need about $6,000 worth of interior painting, but it has granite countertops, arches, columns, just some really, really nice features. It's in generally very good shape. It's had a lot of renovations over the last several years, and it's right by the high school. And in the South, Friday night football is a big deal, and this property is walking distance to the stadium. And love this property. It should cash flow about $367 a month. If you were to pay cash for the property, it would cash flow around $897 a month. And you see that it has a 13.26% cash on cash return with an 8% cap rate. So this is a very good property that should rent for about $1,200 a month. Gives you a good example of the types of deals that there are. And this is in Prattville, Alabama, which is one of the best school districts in the greater Montgomery area. So very good school district. It's a higher demand area. Next slide. South Bend market is one that I love. We've done over 120 doors there in the last several years. It's about an hour and a half to Chicago. And right now they're having a light rail that's going to be able to commute from downtown Chicago to South Bend and get you to the downtown Chicago in about an hour. So this is a major news. People like it because while Chicago is losing some population, it is the third largest city in the United States right now. And Indiana is a landlord-friendly state. It's very conservative, and so it favors landlords and investors who want to own investment properties because they favor the landlord over the tenant. South Bend is famous because of the universities that are there. If you've ever seen the movie Rudy, Notre Dame University is located in the heart of South Bend, and that's one of America's more prestigious universities. So it's a very, very good school. Rents have increased by 10% year over year, and the cost of living is 12% below national average. So we can get some outstanding deals in the South Bend market, and I'm going to show you a couple of those now. Stephen, is it advancing to the next slide? There we go. This is a house that we love. It's in Mishawaka, which is, again, when we go into the areas, we like to find the areas that are the best parts of town. This property is a B+ home. It's totally renovated. It's got a farmhouse sink, white subway tile backsplashes, tiled showers. It's a new roof. This house is practically a 2022 build. Everything's new from the trusses to the roof. The dormer windows are new. The brand new hardy plank siding, brand new windows, new hot water heater, new furnaces, new flooring, lighting. Everything's been completely redone. The plumbing, the electrical, all brand new. This property currently has an insurance claim tenant that had their home had some flood damage, and so the insurance company moved them in. We actually got $3,800, and they're paying that for the first 4 to 6 months. We think it's going to take 4 to 6 months before their home will be ready. They're about 2 months in, and then after that, the market rent will be about $2,350 on this property, and it gives an 8.37% cap rate with a 10.8% cash on cash return and a $602 a month cash flow. It's $249,000. This is a really nice asset, and we'll be able to give you access to probably 40 or 50 professional photos. It's on over an acre, and it backs up to a lake. And there's a neighborhood of $280,000 homes immediately behind this property. This is another property. Now, these pictures show the pre-renovation. So we're in the middle of renovating this property right now. The downstairs unit was renovated when we bought it already, and we're renovating the upstairs unit and the exterior, doing about a $35,000 renovation on this. $1,725 rent. That's crazy good for a property that is projected to be $132,000 sales price. That could go up or down just a little bit depending on what the renovation cost is. But this property projects a $639 a month cash flow, a cap rate north of 10, which is tremendous in today's market, and a almost 22% cash on cash return. I absolutely love this property. It's got a 2-car garage. It's in a B as in Bravo neighborhood. A retired police officer lives across the street. It's a very nice, quiet neighborhood with good pride of ownership. And it is within probably 5 to 8 miles of Lake Michigan with great parks and recreational activities. And it's about 35 to 40 minutes to Chicago. Indianapolis is another market that we have. I have some properties that are just coming online that we're just finishing in renovation right there right now. And so it's just a very good market to keep an eye on. I'm not going to cover any properties in Indianapolis today, but I do want to point out that the average days on market is only 14 days. The city is expected to grow by 26% over the next 30 years. So this is another market that you're going to get access to working with us. St. Louis, Missouri, right now, we've got about 15 properties available in St. Louis. St. Louis was voted one of the top places in the United States to be able to retire because it's got such low costs of living, and it's got incredibly affordable housing. The median household incomes in St. Louis have grown 6% year over year, and property increases have gone up 2% over the last 12 months. Over the last 5 years, St. Louis has seen home values increase by 60%. And the average days on market is 19 days right now versus 23 days a year ago. So things are moving fairly quickly. St. Louis does have some areas that are high crime, like a lot of major cities. And so we do avoid those areas and just stay out of those zip codes. And if you know what areas are the really good areas, you can get out into the suburbs, you can do very well. Stephen, let's show them a couple of properties that we have in St. Louis. This is a duplex that's in Illinois, just across the Mississippi River. It's about 25 minutes to downtown St. Louis. It's in a suburb. Madison, Illinois is a quiet bedroom community. This is a duplex, 4-sided brick. Again, these are pre-renovation photos. It does have a brand new roof. We're going to be doing about a $30,000 renovation on this property. And we project to be able to sell it at $119,900. And it should cash flow about $664 a month. So it's about a 10% cap rate, and gives you almost a 25% cash on cash return, meaning that when you put your down payment down, there's a very good chance if you put down a 20 or 25% return that you end up getting 25% of your money back that you've invested within the first year of purchasing the property. So this is just a really exciting property. It's in a B- neighborhood, kind of a solid working class neighborhood, and each unit should rent for about $750 per month. So this is an exciting duplex. I love multifamily, and part of the reason I love multifamily is it gives you the opportunity that if one tenant moves out, the other tenant still covers it. I just want to reiterate here, here's some more pictures of a lot of the renovations that we do. And this is going to vary. This is more of a B+, nice single family home. A duplex finish might not be quite this high, but it does kind of show you the quality of the renovations that our contractors put out. So the Quad Cities in Iowa and Illinois, this straddles the Mississippi River. We absolutely love this market. There's lots of great opportunity here for very affordable cash flow properties. We have, in the Illinois side, there's an average rent of $1,619 a month. This is a major transportation hub. There's over a dozen colleges within 50 miles of downtown Davenport. It's a major Amtrak hub. So it's a very connected city. It's very easy to connect to the airport here as an alternative to Chicago, but the affordability is just tremendous. John Deere's headquarters is here, if you're familiar with John Deere tractors. So this is their headquarters. There's a large Amazon facility as well. Let's look at some of the deals that we get in this market. These are some tremendous opportunities. This is a vacation rental. That's one of the things that you get access to through us. This property has an after repair value of $311,000. The price on this is probably going to go up just a little bit because we decided instead of converting it from a 4.1.5 to a 5.3.5, we're actually going to be turning this into a 6-bedroom, 4-bath, and that's going to push the cash flow up. Right now, our projected net cash flow is $2,858 a month with a cash on cash return of 41%. This property would probably rent for around $1,400 to $1,500 a month if we were renting it out to a long-term tenant. But as an Airbnb, there's not a lot of lodging available for people who visit on business. And so we have a separate basement suite, and then we have another owner's suite on the top floor, and then 2 other bedrooms on the top floor, and another bedroom and a bath on the main floor. So we can rent these to individual separate traveling parties, and this allows us to potentially net somewhere between $30,000 and $60,000 a year. It's in a neighborhood that has a lot of $600,000 to $800,000 Victorian mansions. You have seasonal views of the Mississippi River, and it's right in the heart of downtown Davenport. So vacation rentals can be an exciting way to invest and get much, much higher returns. And if you choose to visit the United States, it gives you a free place to stay. Here's our 2 duplexes. We have both of these under contract side by side. These are right downtown. They're walking distance to the Mississippi River, walking distance to the heart of downtown Davenport. We're at $135,000 per duplex on this, so you could buy both and own them side by side. We're going to be doing some nice renovations on this property that will make it very ready for tenants. This property should rent for $1,500 per month, and each unit is 2 bedrooms and 1 bath. They do have a basement with laundry on site, which is really nice for apartments. New paint, the flooring's been redone. We're going to be painting those kitchen cabinets, putting new countertops on, and doing some upgrades to the property. But this represents a 15.79% cash on cash return, nearly a 9% cap rate. But this is in an area that kind of backs up to a warehouse district of really cool apartments and kind of old factories that have been renovated and stuff like that. It's just a really cool area that we feel like is transitioning in the right direction. And these properties could see a lot of appreciation in the next few years. So a nice multi-family option. Cleveland, Ohio is another market that we're doing very, very well on. It's one that's been revitalizing. There's been hundreds of millions of dollars of value that's been dumped into the downtown. They've been renovating a lot. The GDP of Cleveland is $114 billion. Standard Oil was founded in Cleveland, Ohio. So it's really seen a lot of increase in GDP, 6% in the last 10 years. And over the last 5 years, home values in Cleveland have increased by 115%. So this is a good market. Homes are selling at a 100% of their list price right now. The Red Line Rapid Train is known as one of the best mass transit systems in the country. Cleveland's home to major professional sports teams and several Fortune 100 headquarters located right on the Great Lakes. So we have some nicely renovated properties in Cleveland, Ohio. We'll showcase some of those for you. We have both Airbnbs and duplexes. This first property is a great duplex in a highly sought after area. It's a very good cash on cash return. It's got a good cap rate. The renovation, as you can see, is very nicely done, fully finished, bringing in $2,000 a month rent with a cash on cash return nearing 15%, with a net cash flow of $641 a month. Very nice property. Duplex. Yeah, I love the separate balconies that each unit has. Just a very nice property. Luxury vinyl plank is very low maintenance, beautiful colors. Just a very nicely renovated property. This property here brings in about $3,000 a month. This again is another great duplex in the heart of town. It's a very good location, highly sought after. You can see the stainless steel appliances, the brand new kitchen cabinets, the really nice stainless sink with a really nice faucet. This is a very nice property. It has about 40,000 equity is what we were projecting on this one. So this one may even be an equity play. Cash flow is only about $286 a month, but it's a very nice property in a very good area that's seen a lot of revitalization. One of the things that's most important when you're buying properties in the United States, especially if you live out of country, is to have a very solid property management team. We've chosen to work with some of the biggest property managers in the countries that are nationwide. We have three or four different vendors that manage properties in over 52 markets. And so what that allows us to do is markets change and opportunities go away and new markets open up to become better over time. It allows us to be able to transition and shift and to be able to use the same property management company where you could potentially end up buying 5 or 10 properties and spreading your portfolio across the best 2 or 3 cities that you like the most, but deal with the same property manager. A lot of our property managers in some of these different companies are master property managers. This designation is a very prestigious designation that's administered by NARPM, which is the National Association of Residential Property Managers. There are only 185 active property managers across the entire United States that hold this designation, and we try to seek property management companies that have master property manager designees. And so that means they really know what they're doing. They're abreast with all of the best technology, all of the latest trends. They understand how to manage your properties and get the best possible results. And so these are strongly investment-oriented property management firms that deal with investors, and they have a lot of foreign investors that they work with. And so that's really a nice ability to be able to potentially have one property management firm for all of your properties. It makes the management process very easy. The next slide talks a little bit about some of the processes that most of these properties have. But again, some of the main thing is there's thousands of properties that are under management. They have comprehensive tenant screening. They're going to do a good job of background checks, credit checks, verifying with the previous landlords that they paid the rent and they were a good tenant and they didn't damage the property. They market the properties out to 48 websites. So they do a great deal of marketing to make sure they can fill the properties quickly when they become vacant. They make sure that they're compliant with laws. They do move in, move out, and periodic quarterly inspections where they'll do PDF reports and email you photos. They'll say, okay, we're going to come in and change out the air filters on your air conditioning. And when they send the technician in, they'll shoot pictures of the different rooms and just make sure that the property is being well maintained. That's very important because if a tenant is doing damage to the property, it allows us very quickly to charge them and make sure that they pay for it, or that we're able to collect it from the security deposit or get that tenant out before they do too much damage to your property. So these periodic inspections can be a great way to safeguard and protect your asset. They have assurance programs and different things you can do to make sure that the tenants are paying, as well as things like tenant insurance, where you can force the tenant to pay a little bit more on their monthly rent to go towards an insurance, so that if they move out or they do damage to the property, the insurance will cover the lost rent or cover the damage that they might do to a property. That's just another nice way to make the real estate investment process, while you're benefiting from the appreciation and the tenants paying down the principal and basically buying a property for you, to be able to insure it and take out most of the risk on real estate investing. We really like that. Our property managers also have a vendor network of people that are contractors and handyman, that if a small maintenance request comes up, they're able to handle it very quickly and very inexpensively. So we like that. And they make sure to get proof of liabilities and workers' comp insurance, as well as a protection. So that's very good. They have 24/7, 365-day a year on-call services to be able to handle anything that a tenant might need. So that's something that's really good. But one of the things I want you to understand is we really stand behind our properties. We work with a lot of different turnkey providers across the country that work with us. We're on site all the time, checking these properties, flying in, inspecting them, setting the rehab scopes, and making sure that they're renovated to a very high standard. We've been doing this for over 20 years. And so we have an awful lot of experience in having done over 3,800 properties. We've been working with clients internationally for about 15 years. In fact, Stephen and I have known each other for probably about 7 years, 6 or 7 years. And he's somebody that's highly respected in the United States, as somebody who provides properties in a lot of the best markets. And he's been trying to work out a relationship to be able to sell our properties for quite some time. And we just had so much property that were moving so fast, the demand was high. But due to the expansion that we've been able to have, we have some really great properties. They move very quickly, usually in the last 2 to 3 days. But there's excellent properties that you've seen, and I have another 15 to 20 that we didn't have time to cover in this presentation. So get with Stephen and Nick and James, and we'll make sure that we can help you to be able to get some really strong investments with high returns, that the tenants can purchase these houses for you, and you can see some strong appreciation and preserve capital in the United States. So we feel like real estate in the United States is one of the best bets in the world. It's consistently gone up. We've got strong population growth. And right now, the housing demand in the United States is about 6 million units. It's 6 million units short nationwide. And so we have very high demand. People are renting out their parents' basements right now because they can't find places to live. And so rents have been going up at higher rates historically than they have in over 30 years.
Oh, well, that's thanks for that great overview, Jared, of what you do. And I mean, you can see from the presentation there, he's really covering the whole market, from acquisition and property management, which is of course very, very important for overseas investors. So we'll get back to you in a moment, Jared, with the Q&A session, and I'll pass over to Nick.
Yeah, thanks, Steve. Thanks, Jared, for all that info. It's very interesting, and definitely some good opportunities in the different markets. My name's Nick Worthing. I'm with American Mortgages. I'm one of our loan officers here. And it's funny, basically all of the markets that Jared highlighted are all markets that a lot of our clients who are foreign national investors around the world are targeting as well. And the opportunity and the returns and the appreciation and the strong rental market are all reasons for that. So we continue to see that playing out in the future. And so I think today, what we wanted to show is the what we're trying to do as a company is make it as easy as possible for somebody living overseas to purchase property in the States. We've done a very good job at making the mortgage process and obtaining a mortgage very easy from your home country. But we know that purchasing real estate in this, in the US, the mortgage is just one piece. There's, as Jared pointed out, there's a lot of other pieces that go in, finding the right market, finding the right property, finding, where in a market to avoid and where to go to, and then obviously the property management and the tenant, being in place. That they're huge opportunities for clients, and it's been feedback that we've heard from customers along the way is if you could make it sort of like a package deal, we've got the cash, we've got the funds to invest, we want to do it. If you can make it as easy as possible for us, we'll do it. And I think that's what we're doing here with Jared and his company and expanding this partnership. So thanks for that. So I think I'll talk a little bit about the financing side. Just, I think a lot of you have joined us in the past before, but it'd be good just to highlight the different programs available for foreign nationals as far as mortgage financing in the States. And then from there, we can take it to question and answer. So as a foreign national, I think the biggest thing, if you remember anything from this webinar, is you definitely can get a mortgage in the States. You don't need US citizenship. You don't need US income, and you don't need US credit. Those are all questions that we get quite a lot from people that have purchased in cash over the years, just because they thought, I'm not a citizen, I can't get a mortgage, or I don't have credit, I can't get a mortgage. And if you don't have credit, it actually makes it easier for you to get a loan in the US than it would be for an American citizen with no credit. So it's an interesting concept, but we can help put loan programs together where you can finance up to 75% of the purchase price. So you're putting 25% down, financing the rest. Loan programs and loan terms are 30-year fixed rates. We've got some adjustable rate mortgages now that are getting a little bit more competitive. And payments are anything from an amortizing payment to an interest-only payment, which has become quite popular with rate movement in the past 6 months or so. I'll touch on there's two main ways to qualify for the loan. One, the cash flow mortgage, or what we call debt service coverage ratio, is based just on the property itself. The reason a lot of our clients like and use this program is it's made specifically for investors. So it's property specific. We don't ask for any personal income from you or any personal documents from you. As far as income goes in your home country, everything is based on this property itself. So to give you an example, if you go into a contract on a property that's for sale for say $300,000, we would send an appraiser out. They'll look at the property. They'll say the home's worth $300,000. It would rent on a monthly basis for about $3,000. And as long as that $3,000 is enough to cover the mortgage payment, the loan goes through. It may sound as easy, it may sound too easy, but that's really as simple as it is. They're made for investors, and a lot of investors use them because they can move quickly, provide minimal documentation, and get the highest leverage. And this program works really well in a lot of these turnkey property states and properties like Jared had shown, because the rental yields are so good. I mean, you can see the property prices are very cheap compared to a lot of markets in the world and in the US. And the monthly rental income has no issues covering the mortgage payment. So very easy, very streamlined. Process takes about 30 to 45 days from start to finish. You can do the whole purchase and closing from your home country, and our team is based around the world on your time zone and able to help you walk you through the process from start to finish. We also have clients that are purchasing properties and maybe they have personal income that's high, easy to document, and they want to qualify based on their personal income. If that's the route they want to go, or if that's the route, when they strategize with the loan officer is the best, then we can definitely go that route as well. Documenting income with us is simply just an income letter from either your employer or your accountant. So we have clients that have a number of businesses and income streams from different countries, different businesses, and they don't want to go through the hassle of getting tax returns from every single business or different country. And we've solved that by just using simple income letter. Everything can be combined onto one letter. We use that to document the income, and the loan moves forward. So, very easy, to qualify. Our team does, these are the loans we do all day, every day. And all of our clients are in your position. So we're very comfortable with the signing process and walking you all the way through start to finish. Two different loan programs that, work particularly well in this, in these markets that Jared, had brought up, because you've got a lot of homes that are on the lower end of the, the price range in the 100 to 150,000. And when a lot of people think of a mortgage, they'll think about, one loan for one property. I buy a home for 200,000. I'm doing a mortgage on that home, and it's collateralized by that home itself. When we have properties that are in the 100 to 150,000 range, it becomes a little bit harder to finance those properties on a standalone basis. So what we've done is created, and what a lot of our clients use is what's called a portfolio loan, which is one loan cross-collateralized over a number of different properties. And we underwrite it the same way. The pricing is almost identical as a single rental loan, but it's one loan over, up to 100 different properties, one payment, very easy to manage. And the clients really like it. So, I think we do, a very good job of making this part easy for you, and Jared and, his company will do a very good job at making the identifying the home, putting a property manager in place, putting a tenant in place, where a lot of these you could be cash flow positive, from month one, which is really a great opportunity. You want to head to question and answer, Steve? Oh, Steve's on mute here.
Ah, that's great. Okay, thanks. Thanks, Nick. I was just trying to get the button off of mute, but really appreciate that overview. American Mortgages, as Nick discussed, is here to assist our clients for the financing for these properties. And, Jared's had the experience to be able to get those underway. So to look at those opportunities. So now I think we'll go to the Q&A session. So we've got several questions already to start with. First question off the rank is, how do I get started if I'm interested? So I think that's a good place to start. So I think at this stage, if you get in contact with
that one.
Yeah, if you take that, Nick.
Yeah, thanks. It's a good question, and I think the first place really to start is reaching out to our company, scheduling a call with our team, because really, what you want to make sure is you can provide the documents that we need to help put the mortgage in place. A lot of clients come to us saying, I want to purchase a home. What are the terms? What are the ranges, and what can I qualify for? And those are all questions that our team can help. And those are all things that when you approach a realtor, whether it be Jared's company or another real estate agent, first thing they're going to ask you is, what's your home budget and have you been pre-approved? And that's the pre-approval letter is something our team can help with pretty quickly. So I think first step is, reaching out, having a call with one of our loan officers, figuring out what program is best for you, starting the pre-approval process. And then once you've got the pre-approval, we can help connect you with either Jared or a real estate agent, or if you've got your own, then it works as well. So pre-approval is the place to start.
Yeah, I would really agree with that, because the truth is, if you're going to be making an offer on a property, that the sellers always want to know for sure that you can go through and they're not going to lose time on the market and then not have a buyer who can perform. But the other thing is, you might be surprised, you might qualify for more property than you think, and you might be able to get a really nice vacation rental or a multifamily property instead of just a single family, and make a lot more income.
Yeah, that's true. I mean, having invested myself for the last 10 years or so in the US, the pre-approval letter is key to get things underway. So yeah, if best place to start is contact American Mortgages, and we'll start from there. Second question, if there are any issues with the property manager, who can I talk to? Is that's probably one for Jared.
Well, the property managers typically will assign you a specific property manager. So let's say that they're managing 400 properties. They might have 6 property managers where you are assigned to one property manager who handles 50 or 60 properties, and they're going to be able to handle your issues. You'll have their direct phone number, their email, and usually they're going to have a portal that you can log into at any given time and see when the rents were paid, if there was any maintenance items that were conducted. You'll be able to get a full owner's statement, see what your income is. You'll be able to see your rent rolls and see exactly how well they've been paying, and if they were late, what late fee was charged and assessed to them. And so that's actually really, really easy. There's going to be a customer relationship manager that's assigned specifically to help you with your properties.
Great, thanks, Jared. Next one. What states do you operate in? This is for Jared. And what state taxes will be payable?
So the state taxes vary, and on any property that you're purchasing, we'll give you the property taxes, and we can give you the last year's, and then we can also give you some projections based on the millage rates that the county has, and give you a pretty good understanding of what property taxes would be. Most of the states that we're in, breadbasket states, the Southeast, most of them are fairly low. Illinois is an exception. The property taxes are fairly high in Illinois, but the prices on the properties are so affordable and the rents are so good in proportion to the ratio that it balances out. Like Alabama is number 48 in the country. Only Hawaii and one other state has lower property taxes than Alabama. And so in each case, we're going to give you the property taxes and you'll know how it affects the cash flow, and it will be in your pro forma.
Okay. I think this one for Nick. Can I purchase using a mortgage, and what sort of LTV ratio would I have?
Yeah, definitely purchase with a mortgage. I mean, that's our company's sole focus. Loan to values or loan LTV ratios can range on a purchase, can range up to 75%. A lot of times we have clients that want to put down a little bit more than that, but the minimum down payment is typically about 25%.
Thank you. Next one. So how to arrange home insurance for these places? With that, Jared, would you be able to answer
Our
that
website
one?
actually has a portal where you can potentially, we'll be able to connect you directly to American Mortgages, and eventually you'll be able to get pre-approved for the loan through American Mortgages right through our website when you click on a property. But we do have the capability to be able to do the closings right through our website. They'll do a mail away closing. You don't have to be present. And as far as insurance, we have a nationwide insurance provider that specializes just in investment property insurance. They have the best rates and the best quality insurance that gives you the most coverages for the value, and you can get a quote right on our website for each property.
Great, thanks. Nick, question for you. What is the interest rate at the moment with finance?
Yeah, good question. And it really depends on the program and the property, but on an investment property, specifically for foreign nationals, the rates are going to range anywhere, I think, from 8% up to 9 to 9.5%. Again, it just depends on the leverage, the cash flow of the property, and how we're qualifying. Obviously, those rates are higher than if we were talking in January, the rate would have been low fours, to high fours. But that's just it. That's just where the market is. The good thing about that is it's really cooled the market as far as competition is concerned. I mentioned this on a webinar we had last month, where when rates were just rock bottom, everybody was out in the market, everybody was buying a property, and everybody was offering on these properties. So you'd find a home in the market that was just perfect for you, and you put in an offer and there may be 10, 15 other offers behind you. So that's something that rates, I wouldn't let rates scare you, because they've definitely put a lot of people on the sidelines, and you can definitely find some good opportunities now.
Yeah, and I suppose another thing, Nick, too, would be that over the last 2 years there's been a very big increase in rents as well, which have which would offset the increase in rates as well.
Right.
Yeah.
I also think there's a good chance the rates will go down over the next year, and if they do, you can always refinance and end up improving your cash flow quite a bit as well, and that's nice. And prices are down a little bit from where they were. It used to be we'd have 20 offers for the same property, and you couldn't even get inventory. That's part of the reason why Steve couldn't get stuff from us. Is if I put something on the market, I had 10 or 15 offers within the first 24 hours, and it might sell for $20,000 above list price. Now we're selling properties where they may have $5,000 or $7,000 equity sometimes, and you can get plenty of inventory, and you have a good selection to choose from.
Yeah. Okay. Cool. So here's another one for you, Nick. Can I buy several properties at the same time? For example, if he's got 500K USD at the moment, how many properties could he buy with leverage?
Yeah, you definitely can. It's a good question. So that's the portfolio loan program, which I mentioned earlier. It's one loan, collateralized by 5 up to 100 different properties. Very easy to qualify. As far as how much you can, buy with a 500,000 down payment, just off the top of my head, I think that would put you in the $1.2 million to $1.5 million range as far as the portfolio value. But of course, it's going to depend on the cash flow of the properties. That's something our team can help talk you through as well. But yes, the answer is definitely you can purchase one group of properties with one loan, and it's a pretty straightforward process. Okay.
Another one for you, Nick. Which are currently providing the best mortgage rates? Just a single, portfolio, or just a one-off type mortgage? And also, how does the portfolio manage mortgage work if you're sort of adding or removing properties or refinancing?
Yeah, so the rates are, the first question as far as the difference in rates between the two, the rates are quite similar between the two programs. There's not a lot of difference between doing a portfolio loan versus a single rental loan. If you start getting into the larger portfolios, that's where you'll start seeing some of the price breaks on the pricing. But if you're in the typical price range, the rates are going to be quite similar. And then to answer the question as far as how to remove a property and sell it should you need to, it's a good question. And actually, so there's one loan that is collateralized by all the properties, but within, and say your loan amounts to $1 million, and you have 10 properties. In the loan documents, there will be a listing of each address and the loan amount piece of that million that's associated to that particular property. So if you have property, just to make it simple math, if you had $1 million and 10 properties, each one was worth $100,000, and then you wanted to sell property one, the lender would typically have you pay about 125% of that property's loan allocation, so 125,000, to be able to remove it out of the property portfolio. So it's one loan, but there definitely is some ability to remove property should you decide to sell.
Right. Okay. And then a question here about, can you refinance properties already paid off? And what is the rate of dealing with a portfolio? I think.
So first, definitely we can do. That's something that a lot of people have done in the U.S. It's called the cash out refinance. And even though rates are higher, a lot of our clients who are overseas have taken advantage of cash out refinancing over the past months because the U.S. dollar has been so strong. So if the home is free and clear, you can definitely put a mortgage on it. The process is the same. The pricing is pretty similar. Cash out refinances are priced a little bit higher than purchase would be, but you can definitely put a mortgage on the property, and cash out proceeds would be wired to your bank account.
Okay. One more for Nick. This guy's question is, I don't have any experience in buying property in the US or any credit rating. Will that have any impact on my rate?
No, it won't. So on the residential side, on the foreign nationals, we don't require any credit. So everybody is sort of priced in the same bucket, and credit isn't really, it's different in the sense if you're comparing it to like an American citizen getting a loan, where their pricing is heavily dependent on where their credit score ranges, versus a foreign national. Everybody, is in the same boat with no credit. That the credit score isn't really the determinant for pricing. It's more loan to value and property cash flow. So no credit's required and no income's required in the States.
Great, thank you. So Jared, question about management. So who manages the property? Who would manage the property on my behalf? That was the question. And also, what would be the annual cost?
So it's typically a monthly cost. And because we do a large volume of properties with each provider, for instance, in Alabama, we're about half of the portfolio for our Montgomery affiliate. And so we have a lot of sway. We can definitely make sure they're giving you good service because they don't want to lose our business, because we're a significant player in every market that we're in because of the volume of properties that we buy and produce. But as far as who would manage it, there's different various companies, because obviously if we're in 10 different markets, you can have a different property manager depending on the market. and you have an opportunity to interview the property manager, we'll get you on the phone with them. And usually we try to have a couple of options in each city. So you can interview 2 different companies and choose the one that you like. You're not tied down to having to use one property manager. But if you're doing a portfolio loan and you end up getting 5 or 10 properties, a lot of times it's a good idea to choose one of the vendors that's in more of the market, so you can deal with one relationship potentially. Evernest and Pure are 2 property managers that we like a lot, but we have some very good ones. Camelot Properties in Montgomery is very, very good. There's a lot of excellent property managers, but usually you're going to plan on paying 8 to 10%. We usually try to go with 10%. I've gotten into where people have given me discounts down to 8. But what I found was, for saving $15 or $20 a month per property, people didn't give you as good a service. I'd rather pay the premium, even with giving them lots of properties, and make sure that I'm the #1 priority for them to return my calls or emails and give me the best possible service.
Yeah, no, that's good. And another one, Jared, what warranties are available for any rehabbing work?
So that's, again, dependent on the rehab crew. Most of our vendors have a 1-year warranty on labor for things that they've done. But again, that's always a complicated question, because you have to look at, was it a problem from the rehab where it wasn't done right? In that case, the vendor is going to step in, and usually they're just going to fix that within the first year. But if it's something where the tenant damaged it, then that's something that the security deposit would cover, or the property manager would make sure that the tenant paid for it. For instance, we had a tenant once that decided, we went out there and we found out that the sewer line had backed up, and we went to look at it, and it was a year after the client had bought it. I think it was about 16 months. And they said, well, could you please fix the sewer? We feel like that should have been replaced. And when we talked to the tenant said, oh, well, I'm sorry, but my 4-year-old loves to flush toys down the toilet. And we found a Tonka truck the size of my fist in the sewer line. And so it's like, if you're flushing Tonka trucks down the toilet, that's not something that's going to be a warranty item. And if that's a $1,500 repair, then potentially that's part of the reason why you want to make sure your tenants have renter's insurance, because in that case you can submit the claim to the renter's insurance, and so you would have recourse that way.
Yeah. Okay. Another one for Nick. Can a U.S. citizen with no U.S. credit get a mortgage?
Yeah, so that's when I mentioned earlier, it's actually easier for a foreign national. So when Americans don't have U.S. credit, if they're buying an investment property, there are still some lenders that will have no FICO programs. It's definitely a slimmer market as far as lenders go. But we have had clients in your situation where they've been outside of the country for so long, don't utilize any banks or credit cards in the States, and the credit score just drops off after, say, 10 years. But we did do several loans with a client it's an American citizen with no credit score over the past few years. So yes, it's an option, and our team can help you through it.
Great. Okay. And another one for you, Nick. He says, I'm a US expat earning overseas income. How long would it take to get pre-approved?
The pre-approval process can take, we can, depending on the file, we can turn it around from the same day to the next day. It usually takes us about 2 days to get you back a letter. Now our team can work pretty diligently. If you found a home that you want to put an offer on, we can, typically turn it around in the same day. So it's not as long as you might think. Okay.
Here's another one for you, Nick. I'm a US expat living in London. He doesn't have a W-2. Works for an EU company. Tried with Bank of America twice. Can you guys do a refinance for him? And would the rates be higher?
Yeah, we do, and we actually get that call quite a bit. So a lot of clients, a lot of American expats that are working overseas have foreign income, will go down the road with either a purchase or a refinance with some of the larger banks in the States. And it's not until pretty deep into the process do they find out that the foreign income or even foreign residency in some cases is a knockout for those lenders. So we do have banks that will refinance and do purchases. The US expat market is a pretty big market for us. So we would have no issues getting that loan done.
That's great. Okay. Here's one for you, Jared. This guy said he's had issues with the tenant not paying rent, which made him pay the mortgage late. could I still get a loan to save the property? I need this one right away. Who do I contact?
I can actually take that one, Jared. It's more of a.
Oh, sorry. Yeah, that's for you. I must have read the wrong question. Sorry.
It is definitely something you want to, if you have a late payment, it's definitely something you want to do is contact our team right away, because the length of that late payment, the longer it goes, the harder it will become to have the financing go through. But it sounds like you're still in the window where something can be done. So, I would definitely reach out to our website, schedule a call with one of our loan officers, and we can help put something together for you.
Okay.
One thing I would point out is we do have there are insurance programs out there for higher risk tenants. If the tenant doesn't have a really great credit score, you can have them pay an insurance that's like $50 a month, and you just make them pay that since they're a higher risk, and then that insurance would actually cover this type of situation.
Yeah, no, that's good. Another one for you, Nick. How much does it cost to get pre-approved?
Nothing. So we don't. There's actually no cost for the pre-approval, for any of the consultation. The first cost that you will run into is the appraisal cost, which is done only when you find a property and have it in contract, and that cost is actually paid directly to the appraiser. All of the other costs for the loan are handled at closing. So no upfront fees. Everything's done at closing through the title company.
Yeah. And another one for Nick. Are mortgages only for some states or in all states of the USA?
We can operate in all states in the US.
Okay. And for Jared, this is a broad question. What are the sort of rental returns on a property at, say, 200,000?
Well, that's a broad question that's kind of hard to answer, because it's gonna depend on the property taxes. It'll depend on the insurance. It'll depend on something in Florida on the Gulf would be different, because the insurance rates would be a lot higher and stuff like that in Florida, and something in Texas would have a lot higher property taxes. And it also depends on whether you're buying a C-class duplex for 200,000 or maybe a triplex, or you might be able to get an 8-plex. In some markets for that, or you could be buying an Airbnb that would give a much higher return. So this is going to be a case-by-case basis on whether you choose to do multifamily, single family, Class A, Class B, Class C, what state you're in. A lot of variables there. But I would say that a lot of our properties are offering a 15 to 20% cash-on-cash return. So if you were putting down $50,000, you should expect probably 20% cash on cash, 15% cash on cash return on that. And so that would give you a kind of a barometer of how much of that money you could see back in year one.
Yeah. Okay. And one for Nick about, do you offer advice or can suggest a tax advisor if I was to go ahead and buy a property?
Yeah, I mean, so we don't offer tax advice ourselves, but we do have and work with a number of CPAs in the States that specialize in foreign investors. So we can definitely make an introduction for you.
Mm-hmm. Great. Okay. Oh, okay. Oh no, I've got someone who said he's been very happy working with American Mortgages. So that's good. Good experience. Okay. So I've got another guy. A question is, he owns 16 units in Atlanta, and would he be able to release equity and buy more with leverage? He's got no mortgage on those at the moment.
Yeah, absolutely. And Atlanta is a big market for us, and I know Jared said was a big market for him in the past. We have a lot of clients, particularly in Asia, that have a lot of properties in the greater Atlanta area, and we can definitely release some equity out of the current properties you own, and then help use that equity to purchase new properties, or use that equity as a down payment to purchase new properties. So definitely something we can help with and help strategize with you.
That's great. Let's see. That's good. All right, and then I think that's all the questions I have at the moment. Someone has asked about contacting Jared. So as I said at the beginning, we will send out demand an email with the webinar and also contact details for both Nick and Jared. And we'll be in touch very shortly. And that's I think we'll leave it there. I think that's been a really great overview of investment opportunities for people. And thanks very much, Jared, for coming in and talking about what you do. You're very experienced in this type of investing, which I think is very of great interest to people, particularly seeing house prices in Asia, for example, where I've been for a long time. You're looking at $1 million plus for some apartments, and the sort of prices in the US are very great. Great opportunities, great yields. And thank you also, Nick, for giving an overview of the mortgages we have on offer. And please feel free to contact American Mortgages about your mortgage requirements. But we'll be in touch very soon. And thanks for attending today. And thanks, Jared. Thanks, Nick.
Thanks for having us, Steve. Appreciate it.
Thank you. Okay. Bye for now. Bye.